Welcome to Wise Beyond Bitcoin, your home for the crypto neo news, education, and opportunities. My name is Ryan.
My name is Lucas. And as you know, we like to not only cover the opportunities in blockchain and crypto, but recognizing it's just one market among many other markets in the world economy, and really loving to follow monetary policy and the economy at large. We like to keep you up to date with the macro updates. So I have a macro playlist, and we've been following the Fed policy. We've been following its correlation and well, its effect and role in the growth of the crypto market. So if you've been following us for a while, then you've known we've kind of foreseen this slowdown in crypto markets since last November, December, and it's been pretty obvious the direction that the Fed is going to steer the economy for some time. And that's a follow-up kind of where we're at, what's going on with the latest Fed minutes, and what does that mean for the market at large? What does that mean for crypto? And what do they say? What's going on?
Right. Yeah. Well, we just got the minutes for June from the Federal Reserve Open Market Committee meeting. And they are essentially saying that, from the minutes, that if inflation remains a problem and becomes entrenched, that they might have to raise interest rates higher for longer, to deal with that. So it was kind of a hawkish hawkish meeting, which basically means that the board is concerned about inflation and remaining, on top of that and dealing with that is the number one problem. And they say that the risk that we're facing now is that elevated inflation could become entrenched in the public's expectations. So earlier on, we saw the language transitory used to describe inflation, which basically means that it would come and go, right? People wouldn't become accustomed to it and wouldn't be expecting it to remain as like a permanent feature of the market, or a long-term feature of the market, right? When that's changing, and the Fed's starting to believe that the public is beginning to become convinced that inflation will remain a problem for some long period of time. And if those expectations are allowed to become entrenched or become common or widespread, then that makes it more difficult for the Fed to achieve their goals, and they would need to throw more at the problem. So that's kind of that was the gist of this meeting, is that we might have to go higher for longer, and so it's kind of a wait and see kind of deal. And they're also making it clear that they are really, really committed to getting inflation to 2%, even if that means they're going to have to slow the economy down in the meantime. The use of the word recession is being used more frequently. Clearly, the Fed's changing how they're sowing expectations, and they're trying to get us, ready and basically to accept the idea that the economy might be slowing down and in the near future. So very hawkish. The common sense or intuitive response you would imagine to this would be for people to sell their stocks and their risk assets, because higher rates of higher Fed fund rate means lower present values. As we use higher, as interest rates go higher, the discounting of future money into present sums becomes a greater discount. So present prices on assets should fall in a higher interest rate environment. So the intuition is that these minutes would lead people to sell, but the opposite happened. These minutes came out and the market rallied. And what are your thoughts on? I know this is a theme we kind of return to, this bad news is good news phenomenon, right? But what do you think about that? Is that makes sense? I know it's counterintuitive.
I think that it's a follow-up. It's similar to what we've been saying before, when the good news was taken as bad news and bad news is good news, as you said. And why is that? Why is it? Because the idea is that, well, if the market's contracting and if things are slowing down, then the Fed, seems like bad news, then that means that the Fed will pull down and not have to be as drastic with the rate hikes. So it's that even though it's bad news right now with the market, it's good news in the sense that it can be taken as, well, this means that the rate hikes won't be as high. Just like before when we were talking about, and we saw this when good news came out and the markets dumped, and we said, well, good news is bad news, because this means that the Fed's going to have to respond and say, look, we need to take advantage of this booming market right now and jack up the interest rates to slow it down. So,
Right.
that's like you said, but also one of the things we've been covering, because this is just, if with following economics, our background economics, and anyone who follows the Fed and monetary policy, one of the jobs of the Fed is to manage expectations. So a lot of the announcements, a lot of the news that they say, like you mentioned, transitory or entrenched, a lot of these words, they are there to put the brakes or to accelerate certain areas of the market. And where I feel, and I know we'll both talk about this, where we're at the moment is, like you said, we're in this Cancer season, crab walking sideways kind of time right now. But I feel that there's definitely still more of deflating the market, deflating the economy and slowing it down, more rate hikes, more deleveraging. We'll talk about that in traditional markets, but also in blockchain and crypto. But it definitely, we could say that the steep movements could be over, and it could be a slowing down while still bringing it down. It's going at a slower rate. So
yeah, it could be. We might have seen the drastic, reductions in prices, the inverse parabolas that might be a thing of the past, and maybe we'll see some slower, more gradual movements down.
But like you
Remains to be
mentioned,
seen.
But like you've mentioned, and I know we don't have an article on this in the past, but we've been talking about this for a long time, and it's been actually reflected in policy, but that the administration has an ability to affect inflation, to fight inflation by reducing tariffs. And so you've got national tax policy, and as that's taken more seriously and more things are done on the supply side and the market, then you'll see that the Fed, well, that's also good news. They won't have to take drastic action, or could even make the policy that they're doing a little bit more effective and
more
efficient.
Sure.
So,
well, let's go to this next article. This is getting into some of the reasoning we just talked about briefly about why the markets, why they reacted the way they did to a very hawkish meeting from the Fed. And it's because the market's signaling that recession is a threat, right? We just had a bunch of GDP data come out that essentially showed that inventories are piling up and consumer demand is slowing. There's weakness in the housing market in terms of the number of days that a house is sitting on the market, and the prices are starting to show weakness for the first time. So and then of course there is the labor market, right, which is a big part of the economy. And we just got some news from the labor market today, which is relevant. But just before I get to that, I just want to say that there are signs that the economy is slowing down, and that essentially means that the Fed is not, that their policy is working, and that maybe if the economy starts to slow down now, that they might not need to raise rates as high or as long or for as long, right, as what we expected. Inflation might not be as entrenched as what we think, and that would be bullish for stocks, because the end of the rate hike means that the next bull market is kind of in the works, right? So that's why that's why the stock market would be doing okay, or there'd be some green shoots, some life in the stock market in the middle of this rate hike environment. And it's because of these recession signs that signal maybe we're further down the path of correction and deflation in the rate hike than what we thought. But of course, that we need more data, and as time will tell, as we learn more. But one of the big
And
things that came out today is labor market data. So there was an expectation for around 268,000 jobs to be created in June. And something roughly like that. And the result, when we actually got the numbers, was that there was more job creation in June than was expected. So what that means is that the job market, the labor market, still remains strong. There's still strong demand for labor. And that's incompatible with a economic slowdown. That's incompatible with the idea of a recession. So why this is good news is actually bad news is it's the very reverse of what we just said. But this essentially means that there's still some growth, or I'm sorry, there's still some economic strength in the job market. That means that inflation is still a factor. And so the idea is that this means the Fed will potentially have to continue this rate hike path that we thought they were going to do anyway. So it's basically a mixed bag. You got some parts of the economy slowing down, others remain strong. And so it's this labor market data essentially makes the case for another 75% rate hike in July, and maybe another one in in August, right? So the idea here is that good news can be bad news sometimes, and you will see, and this paradoxical relationship is borne out in the stock market, as you see between today and yesterday. The market doesn't seem to know what it wants to do. Does it want to go down? Does it want to go up? You know, it's parsing all this data and trying to find a direction, trying to read the tea leaves. And I think right now we're in one of these spots where it could really go either way. It's a tipping point, and we're not sure. You know, we'll know more as July gets in the books. We'll find out, you know, what happened with the GDP. Did it contract in July? You know, inflation numbers will come out, unemployment and labor market numbers will come out for July. We'll know more then. But right now we're definitely in this limbo period where it's really not clear which direction things are going in.
it does feel that way. That being said, the strong job growth labor market is setting up the stage for definitely another rate hike push. And
Yeah.
we'll stay abreast of the latest of the Fed minutes and the news that comes out to see how it's really a matter of at this point, the brakes are being hit. It's just a matter of how hard are they being hit. Are they going to slam on the brakes harder, or are they going to gently tap on the brakes and let it up for a minute before tapping on it again? So this is a great time to do your research and to look. There's a lot of opportunities in blockchain and crypto at the moment. That's why we still do this, and to share this opportunities and the knowledge out there, because you know this is a new emerging technology in a market, and there are applications, there are communities that are being built and that are building some amazing protocols on blockchain. And we like to cover that, the NFTs and DeFi and proof of stake networks, and how you can directly get involved and participate in one of the most rapidly growing markets and economic sectors in the 20th to 21st century. I mean, feels it's going to be kind of a big deal. Blockchain and crypto. We're talking about Web 3.0 moving over email, Gmail. We talk about privacy and mail with Alter on Secret Network, a privacy blockchain. So there's a lot of developments that are happening, and the future of data storage. We're talking about
Jackal DAO. Yeah.
So many different markets and services can be ported over to the decentralized, secure networks of the future. And if you would like to learn how to participate and get involved and where the opportunities are and who's innovating, we've got playlists that walk you through all of it, how to start a Web 3.0 wallet, like your own email address, how to get involved, and what are some of the latest and greatest dApps, decentralized applications being built, accessible on your Android, on your iPhone. That's how far along it's come. So take your time. This is not financial advice, commercial advice, legal advice. It's not medical advice, marital advice. It's just education, research, entertainment, information for you to absorb and to add to your research and to do with it. Hopefully it helps you in your journey, and we'll continue to share opportunities with you. There's airdrops, and really follow us along and subscribe, like, notification bell, all that, and we will keep you abreast of some of the greatest opportunities going on. Really, we've got a video will come out soon. Some of the top 3 projects on the IBC, which is one of the most interoperable, fastest growing blockchain communities in cryptocurrency. So check it out, check us out, and thank you. Until the next time. Do we cover it all? The macro stuff, I think?
I think that's it. Yeah, I think we got it.
Have a beautiful day. Namaste, y'all.
Thank you.